Good afternoon, everybody, and welcome to the next in our series of CryptoUK Lunch and Learn sessions. We're delighted today to be talking around what we know is a very, very pressing topic for a huge amount of our members, and that is travel rule and travel rule implementation. We've got a fantastic panel today that have been pulled together through support of our Member Advocacy Committee, and we are delighted to be joined by Katerina, Bav, and Anastasia. I'm going to hand over to each of you just to do a quick intro, just to kind of set some context on who you are and where your expertise comes from in this area, and then we'll get the session started. So, Katerina, did you want to go first?
Sure. So thank you so much, and thank you so much for having me and for hosting this session. Hi, everyone. My name is Katerina. I work at Notabene as a director for regulatory and compliance. Notabene is in the travel rule space, so we are a pre-transaction authorization platform that helps businesses comply with the travel rule. We also recently launched an open platform for B2B payments in stablecoins called Notabene Flow. And so my experience with the travel rule really comes from being with the company for the past 4 years. So I've been working with travel rules since the early days of its rollout, and it's been really interesting to work across jurisdictions in supporting that. And I'm very happy to be here because I'm always thrilled to go down memory lane and back to 2023 when I had the privilege of doing a lot of great work with the UK crypto community, and especially through CryptoUK. At the time, I co-chaired travel working group within CryptoUK. And I'll share a bit more about the work that we did together back then throughout the call.
Thanks, Katerina. Anastasia?
Thank you.
Yeah, thank you. Thank you, Sia. Thank you for inviting me. And thank for everyone who joining us today. I'm Anastasia, and I'm head of digital assets at SAMSAP. I was directly involved in the development of our travel rule solution from a compliance perspective, of course. And I continue to work on product improvements to ensure it meets regulatory requirements and address our clients' needs. Yeah, SAMSAP is all-in-one verification platform. We provide QIC, QIB services, and of course, we provide a travel rule solution.
Fantastic. Thank you, Anastasia. And Bhavesh?
Hi, thanks, Sue, and really happy to be here. I'm Bav Panchal. I'm a senior associate at Paul Hastings. We're a US law firm who has a particular focus on fintech, and we advise many members of the crypto and wider fintech community. Our particular expertise recently has obviously looked at licensing applications under the money laundering regulations, and we've had a lot of experience in advising firms on the implementation of the travel rule, including their policies, procedures, and obviously their technological kind of tools that they use, whether that's Notabene, SAMSAP, or other providers. And we've also had a lot of experience in responding to the FCA's queries when it comes to the travel rule as well, whether that's throughout the process, authorization or registration process, or whether that's on an ad hoc basis once the firm is actually registered.
Fantastic. Thanks, Bev. Just before we get started, just for anybody who's on the call live at the moment, if you have any questions, please feel free to put them into the Q&A or into the chat section. We'll loop back around to those at the end of the session, so please do feel free to ask anything that you want. Obviously, many people will be watching this as a recording, so it won't be live. If there are any questions that come up as you watch this, please feel free to get in touch with ourselves at CryptoUK, and we're happy to forward on any questions to the panel here as well. So I will stop talking because I am by no means the expert here, and I will hand over to you, Bav, because I believe you're going to get us kicked off.
Yeah, thanks, Sue. So we thought the first thing to talk about might be around FATF, the FATF Recommendation 16. So for those of you who aren't aware, although I'm sure most of you would be, FATF is obviously an international, an intergovernmental body established in the 1980s. Back in 2012, it first adopted Recommendation 16. Which had the objective of preventing criminals from having unfettered access to wire transfers. And so this was obviously the first iteration of the travel rule that was applicable in the payments market. In 2019, with the rise of crypto, that Recommendation 16, was extended to virtual asset service providers and focuses, and the FATF's Recommendation 16 tends to focus on taking a risk-based approach, or member states taking a risk-based approach to implementing the travel rule into their local legislation. In 2021, there was some updated guidance that was provided. And since then, we've had even more updated guidance as recently as June this year, which was again updated ever so slightly in October. And that looked at the that effectively looked at trying to standardize travel rule across payments and digital assets as well. There are a few different areas which they're focusing on. Some of them may not be wholly relevant to virtual assets, but some of them definitely will be. For instance, the travel rule obligations effectively says that an originator and beneficiary VASP must exchange certain information about their customers when making crypto asset transfers. That information effectively looks at the name and addresses. But they're also looking under the FATF's new recommendations to include date of birth as well. Although you don't have to be worried just yet. That doesn't come in until about 2030, I think. So there's still a bit of time there, which I'm sure a few of you might be grappling with as well, given the kind of information that we're seeing being transferred across. FATF has also issued some additional best practices for travel rule supervision as well. That focuses more on supervisors, but there's some decent reading in there and some interesting reading, I thought, in terms of the Sunrise issue. And we'll come on to that in a later part of the session. But that effectively starts looking at with different jurisdictions implementing the travel rule in different cadences and in a different fashion. It also causes issues, right, for being able to send and receive information cross-border. Piece of information that I found was quite interesting was that 85 out of the 163 FATF member jurisdictions have implemented the travel rule process or rules, and there's a further 14 in the process of doing so. So it does show that there is some uptake here. And I thought, it'll be interesting, Katerina, Anastasia, whether you folks have seen that there is more standardization in terms of the kind of products that you're offering to folks in different jurisdictions.
Thank you, Bev. I think that was a wonderful introduction to the FATF framework. In terms of harmonization of products, I think that goes back into the interoperability issue, which we'll cover in depth in a later stage of today's presentation. But yeah, I'm glad you brought it up, because you talked about the rollout of travel rule regulations across the globe, which has been obviously fragmented, and travel rule legislation is passed at different times in different jurisdictions. So in the rollout of travel rule, we've really been struggling with fragmentation on two sides. One, on the regulatory side, because the requirements are not, first, they are implemented in different ways across different jurisdictions, and obviously at different times. And then on the technical side, we also struggle with fragmentation due to of interoperability with closed source protocols. And I'm sure we'll get to that, and I'll just leave that as a teaser for later, because I know that is a spicy discussion everyone is interested in. Anastasia, I don't know if you want to add something.
Oh, I completely agree with you, Katerina. We also see these issues like fragmentation on the regulatory side and on the technical side. And we try to handle these by introducing jurisdiction-specific rules to help our clients to navigate these fragmented requirements. Yeah, and as for the interoperability issues and some technical issues, so yeah, I think we will discuss it a bit later.
No, that's perfect. Thanks, folks. I think on FATF, I think it's one of the issues that we find across a series of regulation, that when regulations are obviously made by centralized kind of intergovernmental bodies, you do always find there is a difference in implementation across different jurisdictions, which I think causes firms, especially ones with international reach or have international customers, such issues. But I think, as you say, we'll come on to that in a second. Katerina, is it okay if I hand over to you to just go through the UK implementation then, now that we have a bit of an overview of FATF and where it's come from?
Yes, let's do it. So would you allow me to share my screen? I would love to take the audience through a timeline that I prepared. I think I'm not able to share right now.
Apologies, Katerina. I will just hopefully get that set up for you.
No worries. Yeah, while we wait, what we're talking about here, the fragmentation, is especially relevant because the travel is a requirement that entails collaboration between counterparties, which is very unique. So when KYC obligations were rolled out to crypto firms, the same type of challenges didn't arise, because if they were rolled out in your jurisdiction, you comply or you don't comply, but you don't need anyone's collaboration to be able to do it.
I think that
so
should work for you now, Katerina, if you go to the share screen.
thank you so much. Yeah, travel is very unique in that sense. Okay, so I want to walk you through the rollout of Travelable in the UK. So our journey in the UK started a while back ago. So it started in 2021. So 4 years ago, when the HM Treasury launched a consultation on the amendments they were planning to introduce on the money laundering regulations to introduce travel requirements for VASPs. That consultation period ended on October 2021, and coincidentally, the FATF published its most updated guidance for virtual assets and VASPs exactly on the same month as Bev just alluded to. Finally, in 2022, so 1 year after the beginning of the consultation period, travel requirements were passed into UK law, and on this day, a grace period of over 1 year started to run. So essentially, requirements were passed into law, but as you see later in the timeline, they only became, or they only entered into force on the 1st of September 2023. So UK firms had more than 1 year to prepare for the rollout of the travel rule. And within this period, Nota Bene started engaging with the markets, specifically by joining the regulatory sandbox provided by the FCA. So essentially, we joined with a testnet program, which allowed different cohorts of VASPs. So essentially, we organized 2 cohorts of VASPs to test Travelable ahead of the deadline for compliance, with the FCA participating as an observing party. And that was very productive, because firms got the chance to have practical experience with the Travelable before they actually had to comply. And it was also incredibly effective in educating the FCA on how the Travelable applies in crypto assets and the specific challenges that applying this regulation in this space brings. And so the FCA was had more clear expectations on what is possible, what is not possible, and I think that was a very productive effort. Throughout the grace period, there was a lot going on several fronts. So in addition to the money laundering regulations, you have another very important piece of guidance. It's not a binding law or anything like that, but it's very helpful guidance issued by the JMLSG. And for anyone that is not familiar with this body, the JMLSG stands for the Joint Money Laundering Steering Group, and this is a private sector body in the UK that provides guidance on AML and CTF regulations. It's made of UK trade associations in the financial services industry, such as banks, building societies, and investment firms. And they essentially produced very detailed guidance notes to help financial firms interpret and comply with UK AML and CTF legislation. And so while the guidance they produce is not legally binding, it's definitely considered how do you say it, an authoritative source, because it's commonly referenced by the FCA when assessing firms' compliance. And also a very important part is that it is approved by HM Treasury before it is published. So that gives it a stamp of approval. And what I thought was super interesting in my experience with the UK rollout is that this guidance is so the level one guidance that helps firms understand how to comply with the money laundering regulations is produced by a private sector body. So that puts, the pen in the industry's hand, which I think is very helpful because the industry knows exactly where they need more guidance, what best practices could be developed and standardized across the industry. And so I believe, if you put the pen with the people that have operational expertise, you will end up with guidelines that are much more helpful and much more effective in guiding the market. And obviously then that comes with with the Treasury's approval. So it's not that the industry can just self-regulate, but there's actually checks and balances that help it become an authoritative source. And so that was an interesting process because the JMLSG also relied heavily on the CryptoUK group for feedback on this guidance. So the group working on it really had the draft in their hands and were able to really shape it in a way that hopefully is helping firms today. In this process, we were, through CryptoUK as well, constantly engaging with the FCA and Treasury. And one of the issues that was explained to the FCA is the sunrise issue that we already started talking about when Bev was talking about the rollout of FATF requirements across the globe. So we explained to the FCA, obviously travel is not a requirement in force in all jurisdictions yet. So firms need more clarity on how to transact with counterparties that are in jurisdictions that don't have travel obligations yet. And we got the FCA to publish a statement clarifying the expectations for firms transacting with VASPs based in jurisdictions that don't have yet travel obligations. And so they directly addressed the sunrise issue through guidance, which was very helpful. Finally, the JMLSG published their guidance on crypto asset transfers on the 31st of August, so one day before the entry into force of the travel requirements in the UK, and later in September, that guidance received formal approval by Agent Treasury. So this was to kind of walk you through the process that we went through in the UK. And in this slide, I just really wanted to summarize the pieces of regulation. If you're just entering the market and if you're just starting to having to deal with the travel rule in the UK, these are the pieces that you should have open on your desktop. So you have the money laundering regulations, you have the Joint Money Laundering Steering Group guidance, and you have this FCA statement that addresses how you should transact with entities based in jurisdictions that don't have yet travel regulations. Another very useful resource for you is this Travel Rule Good Practices Guide developed within CryptoUK. So this is one of the deliverables of the CryptoUK Travel Rule Working Group, and it essentially breaks down the regulatory obligations in detail, looking again at these three pieces, and also gives you a sense of what your peers are doing to overcome some of the challenges in implementing the travel rule. So I think I've heard in another industry call this week that this guide keeps being referenced as a source, which I was very happy about. So it's definitely a good source for anyone dealing with the travel rule in the UK to understand what are the best practices being adopted by your peers. Yeah, I think I'll leave it at that in terms of context on the rollout of travel rule in the UK and kind of the lay of the land. And Anastasia, do you want to take us through or maybe I'll ask you both, do you have anything to add in terms of things the industry should be looking at when trying to understand the requirements and best practices? Or, yeah.
Yeah, thank you, Katarina, for such an excellent overview. Yeah, I just can add that the best source is, of course, a EU regulation that's not for the UK market only. I think that the EU framework with the eBay travel rule guidelines can be considered like a best practice. guide because it provides some practical interpretations and explanations that often lacking in other jurisdictions. So, for example, guidance on response time from the originating VASP when information is missing, or any other practical consideration that raise questions in the market. And just a brief maybe overview of the EU regulation, or maybe not the regulation, just a really brief overview. The travel rule in the EU has been in effect since December 30, 2024. And it was introduced by the Regulation 1113, which is also called Transfer of Funds Regulation, or TFR. However, there is some common misconception, and I often hear that some market participants mistakenly link these requirements, I mean travel requirements, with the MiCA regulation. But we should confirm that that's not accurate, and these acts are different. So we should be careful. And as for the requirements, I would say that the EU travel rule is broadly aligned with the FATF standards. There are some differences, but these differences are not about the overall structure, because the structure is largely consistent across jurisdictions. But these differences are more about implementation and application details, like data scope, treatment of domestic and cross-border transfers, due diligence, and other practical considerations. I think that's just a quick overview of the EU regulation.
Yeah, I think the only other thing I'd add to what Anastasia and Katerina in particular just mentioned is on the JMLSG guidance. It's a fantastic source, and the FCA a court can take it into account whether a firm has complied with it when it seeks to sanction or file any penalties in relation to any breaches that firm may have done. So even though it's labeled guidance, in reality it's closer to law and regulation than we actually think. So for any of you who haven't come across it before, it's definitely worthwhile making sure that you comply in full with the JMLSG guidance. Okay, well, I think that takes us past the rollout. I'm just conscious that we've got 35 minutes and a lot of interesting topics yet to touch on. So the next session we were just going to talk about was just the day-to-day kind of I guess there's two parts to this: the supervisory aspects, and then the kind of issues that we're seeing in the market. And I think we're relatively well placed to see that from what our clients are seeing, and also Katerina and Anastasia are as well in terms of the rollout, and given the fact that they're obviously providers of travel rule solutions as well. So I think from a day-to-day reporting of day-to-day issues and supervision, I think the main piece of reporting that the FCA requires firms to do to it is in the case of non-compliant counterparties. So, for instance, where a firm we're an originating firm, sorry. So you're sending crypto assets to another firm, another VASP, and that VASP repeatedly does not provide the information requested. The FCA wants you to make a note of it, wants registered firms to make a note of that. And if that happens repeatedly, then the FCA requests that you report that firm to the FCA, and that could be a domestic firm or it could be a foreign firm. I think there's some issues around this in terms of what does repeated failures to provide the information actually mean. That's the wording from the money laundering regulations that Katerina had up on screen. And I think that's caused, whenever we advise firms, it's very difficult for them to understand exactly what repeated failures means. So in order to supplement that and to receive that reporting, the FCA has started asking firms every 6 months to provide information on those firms, which those beneficiary VASPs, for instance, that aren't providing relevant travel rule information. I think our understanding, and we've had some of our friendly clients send us over that reporting template, is that this is a spreadsheet. I think one of the biggest issues of receiving a spreadsheet when all your data is digitalized is that you have to download, extract, understand it, upload it again, and and it's not a simple case of, okay, this is the counterparty and this is the date of the transaction. There's a variety of different data fields. I'm looking at it right now, and there's 28 different data fields, or 27, sorry. I mean, you can imagine the case of large exchanges, for instance, where they're conducting thousands, if not hundreds of thousands of transactions a month. That can obviously cause a lot of compliance headache. And I think that's one of the issues we see with crypto asset businesses, especially if they're more nascent, is being able to dedicate that compliance resource to it. So I mean, I don't know, Katerina, Anastasia, whether this is something which you folks are aware of, whether you're in discussions with your clients about potentially how to operationalize that in a way that doesn't take up too much compliance time, because I think that's obviously one of the issues we're seeing.
Yeah. I can take a first stab at it. So definitely, this is one of the requirements that we do support our customers operationalize. We're also familiar with the forum, and essentially we provide support to make sure that the information they need is able to be extracted from their Nota Bene platform in a streamlined way. I think one of the issues that we also come across is what is relevant information to report, because as we were discussing before, travel requirements are different across jurisdictions. In the UK, there's an obligation to receive travel information with every transaction, regardless of amount, and there's a different scope of information that is needed depending on whether the transaction is above or below 1,000 euros. But in jurisdictions, for instance, like the US, you're only required to send travel information for transactions above $3,000. So you may receive a lot of transactions from compliant US counterparties below that $3,000 threshold that, according to the originator's jurisdiction, are perfectly fine. And but according to your jurisdiction in the UK, you would need to receive travel information for those transactions. So I think that poses a relevant question, and I don't know if you have any practical experience in understanding whether the FCA, how the FCA considers that. But one thing that I was concerned about is that in Europe, in Europe we have a similar requirement. So you need to report repeatedly non-compliant counterparties, and my understanding is that that may eventually inform a public list of non-compliant VASPs or CASPs in Europe, which, if it includes CASPs that are just following their travel requirements, which happen to be different than the European travel requirements, that creates a very unfair call out of these VASPs. So I don't know if you had any practical experience with that point.
We haven't seen the FCA take too much interest in travel rule on an operational basis as yet, and I think that's relatively consistent with where we are in the travel rule rollout, and obviously where we are more broadly with the FCA's crypto regulation at the moment. I mean, obviously there's a lot going on in terms of trying to get us into the FSMA, get crypto firms into the FSMA regime. So it's not something that we've seen the FCA approach our clients with just yet. But I think, given the fact that this spreadsheet, this reporting template has now come out, I suspect we'll see something more coming out from them very soon. I mean, it's definitely something which I think is worthwhile discussion with the FCA and any supervisors. I think just looking even more closely at how they're going to actually review that data as well. I mean, in the TradFi world, you have the MDP portal where market data is uploaded to it directly via APIs. That's obviously a way which the FCA could streamline this process, and obviously not just for firms but also for itself. So in short, we haven't seen the FCA come up with too much yet in terms of how they're going to use that list, but it wouldn't surprise me if obviously it would have the same effect. It would take a similar approach to Europe in terms of having a name and shame kind of list. I guess obviously you're right that could put firms at a commercial disadvantage, but I suppose that the way that they'd argue that is looking at it from an investor protection perspective as well. Not that I necessarily agree, but in any event.
Yeah, I think that's a common issue between the regulators, and I would say that the main challenge is that regulatory requirements are not tailored to the crypto sector, to the technology. I just can provide some example. So the regulators require to transmit data before or simultaneously with the transaction. In practice, this conflicts with how crypto operations work, because VASPs may use segregated wallets. So it means one wallet per client, or they may use omnibus wallets or pooled hot wallets. And in pooled hot wallets, or the same case with the UTXO transactions, the VASP doesn't know the exact wallet address that will be used until the moment of execution of the transaction. And this creates an apparent condition. And when we ask regulators what to do, what the approach, what should be to such transactions, actually they answer that, yeah, there is a problem, but we're not sure how to handle this problem. And yeah, we may also see some challenges related to this category. For example, we have requirements for batch file, but batch file is more for traditional finance sector, not a crypto sector. VASPs, this is not uncommon approach in the crypto sector. Or we have requirements for the intermediary VASPs, but who are intermediary VASP in most cases? This is the custodians. And based on the requirements of the travel rule requirements, intermediary VASP is those who receive the transfer, the actual transfer, and send the transfer to the users or to other VASP. But custodians hold these funds and they transfer them based on the instructions of the originating VASP. So it's a different role. So yeah, I think that it's a common issue related to regulators and the lack of some opinions, some overview related to crypto sector. What do you think, Katarina, regarding this issue with hot wallets, pools, and UTXO transactions? How do you handle them?
Yeah. So on hot wallets, I think that goes back, or that kind of points to a bigger issue within travel compliance in crypto, which is counterparty discoverability. So in traditional finance, we transact with IBANs, right? And the IBAN number identifies the financial institution on the other side. And so compliance with R16 relies on that, right? You know the counterparty institution on the other side, you know where to send the information. In crypto, our standard is wallet addresses, and wallet addresses tell you nothing about the counterparty on the other side. It doesn't tell you whether it's a VASP or something else. If it's a VASP, it doesn't tell you which VASP it is. Blockchain analytics can help, but they usually tell you a brand name. They tell you it's Binance, but Binance has multiple legal entities, and you are transacting with a legal entity. You're not transacting with a brand, right? And so you need to understand what specific legal entity needs to receive that information. And that only gets more complicated when we're dealing with hot wallets and so on. So I think that goes back to the discoverability issue or actually to the fact that we rely on wallet addresses to transact, which also has an impact. And we're kind of slowly going into the issues, persistent challenges section. So we talked about the day-to-day compliance with the travel rule and supervision, and now we're slowly making our way to the challenges. And I was saying that the fact that we still rely on wallet addresses to transact has another complication, which is that it puts you in a position where you don't control your deposit flows, right? Because your wallet address, your customer wants to receive funds or to send funds to their account with your VASP. They go to their account and say deposits. You give them a wallet address, and from that point onwards, you lose control over where you're going to receive those funds from, right? So you, for instance, if you wanted to take an approach where you don't want to support any transactions that are not accompanied by travel information, you're mostly dealing with that post deposits. You cannot say, I do not authorize the deposit before the funds move. And that is because, again, we use wallet addresses to transact. So I think a lot of the issues that we're dealing with can be solved if we adopt a different standard. And on this front, actually, since we're talking about deposits, Anastasia, I'm just going to go ahead and share a data point on the impact this is having on the industry, just to put that in context. To kind of inform our discussion about this, and also then the interoperability challenge. So the impact right now on the deposit side, so the fact that or actually, let me say this, on the fragmentation that we still have within Travelable, is that 61.6% of VASPs report that almost none or only a small portion of incoming transactions include required travel information. And this is a direct result of the fragmentation that I'm sure we'll get to discuss in more detail throughout this call. But it also, what I wanted to highlight here is that there's no mechanism for these VASPs to reject these deposits before they arrive. So this creates a very difficult overhead for compliance teams of having to deal with non-compliant deposits after they arrive in their platforms. So I just wanted to quickly share these data points. And going back to the wallet addresses as a standard and what we can do about that, in the Notabene Flow platform that we recently launched, we adopted a different standard for transacting, which we can call addressless transactions, which means that you don't exchange an address with your counterparty before authorization. So the payment journey starts with the payment link. The parties to the transaction exchange travel information and authorization decisions. And only after the recipient of that transaction has authorized it shares with that authorization message the settlement address where the funds should be directed to. And this kind of gives you back control over your deposit addresses by implementing a pre-transaction authorization step where the counterparties collaborate on travel information exchange, risk assessment of the transaction, and on essentially an authorization workflow before the settlement address is revealed for receiving those funds. I know it's going to be a battlefield to completely change the way we transact in crypto, but really I think relying on this wallet addresses as account identifiers is creating a lot of overheads for compliance teams. So hopefully we can come across that.
Yeah, because I suppose it also, and maybe I'm front running the conversation here as well, it also causes sanctions risks as well. I mean, you know, if you receive a token from a sanctioned wallet address, Garantex, for instance, you know, you'll be in receipt of sanctioned funds before you even know it, literally. And then obviously you'd have to be able to work backwards to understand exactly where your sanction exposure arose from. And obviously, you know, blockchain analytics can help with wallet identification, as you said. But you know, what about if the wallet is, you know, what about the sanctioned address is 2 wallets away, kind of thing, you know, two transactions away? Then obviously, again, you're still exposed to an extent. I think also, you know, we were thinking about this internally, just trying to think, you know, how else would you do this in terms of, would you have a list of all the sanctioned wallets? I know OFAC has a list of sanctioned wallets, but Katerina, Anastasia, as you said before, but those wallets change all the time. It's very simple to open up a wallet. So you can sanction one wallet one day and assign that to Garantex, but they might open up another one another day, and you wouldn't know about it until after you've actually got that. And then obviously you look at the knock-on effects of that. Well, compliance teams are then going to have to submit forms, officer reports, all this kind of stuff as well. So I think that's where I think it just, there are lots of issues that arise in this whole wallet address thing. So it's interesting to see that, Deben is doing something on that front.
Yeah, I really like that you bring that up, because one thing that we sometimes forget to talk about is the goals of the travel rules. So the goal here is not that we're sharing information across just for the purpose of, or just for the sake of it, right? The goal is that we're able to effectively leverage that information to, for instance, prevent transacting with sanctioned individuals or entities. And Travelable, what it does is, in addition to the wallet address, which was already available before, it gives you identifying counterparty information. So you're not only checking sanctions for the wallet address, but also for the counterparty customer name, right? But it's very important that you're able to do that before the funds move. So you should be able to review the travel information and make your authorization decision on the transaction based on the information you received before you actually receive the funds. Because then, given that crypto transactions are immediate and irreversible, dealing with non-compliant deposits post-transaction is very challenging. So we get into the issues around returning funds. How do you actually, if you're required to return those first, if it's a sanctioned person, you should probably not return the funds. But in cases where you're required to return the funds, how do you do that? Because you cannot just assume that the originator wallet is capable of receiving those funds. Anastasia, I think that goes back to the issues that you were pointing out. That wallet might not be assigned to a specific user on the other side, so you might be sending the funds to a vacuum, and you may risk losing the funds with all of the liability consequences that come with that. So yeah, a lot to talk about when it comes to how we transact in crypto and how we adapt that to promote a more robust way of managing risk pre-transaction.
Yeah, I completely agree. And just to quickly add regarding the sanction screening, the VASPs may lack sufficient information to do sanction screening. There is a significant risk that the originating VASP may fail to properly assess potential matches, because just because of the lack of the information. So, for example, originating VASP have name about only the name and wallet address about the beneficiary. So we have a lot of false positives. How to handle false positives? Only to ask additional information, but that's not possible. So they rely on the beneficiary VASP, who should check this. And yeah, that also creates a challenge from the VASP perspective. Yeah.
Yeah, no, I think all of this kind of stuff obviously comes down to, there's quite a lot of stuff that needs to be ironed out. And having looked at FATF's updated recommendations, I don't think it does. I don't think it really assists that. So it'll be interesting to see what the FCA, for instance, can do to assist with some of these issues. Is it worthwhile? I'm conscious that we have 15 minutes left. There's probably a few other things, especially around interoperability, that I'm sure quite a few people on the call would want to listen to. But is it worthwhile going straight into that, just so we leave a bit of time at the end for? Yeah, I'll hand it over to you folks to go through that. I know that's obviously some of your bread and butter in terms of how interoperability works.
Yeah, I can start the conversation on this. Yeah, interoperability is definitely a bread and butter that I would rather not have, but it's 2025 and we're still struggling with this issue. I'm sure if the people on the call had to deal with the travel rule, you're more than familiar with what I'm talking about. But just in case anyone is new to the issue, I'm just gonna try to explain the source of it. So when the FATF requirements came up in 2019, there was essentially a bottom-up response from the industry in creating solutions to help the industry meet these requirements, right? So we saw the proliferation of a lot of open travelable protocols, and in parallel, some of those open travelable protocols have in the meantime consolidated, disappeared. Things have changed over the years, but we also saw the emergence of closed source protocols and networks. And these closed source protocols and networks have been mostly developed by VASPs with a large market share in the industry. So we have Trust that is controlled by Coinbase. We have Verify VASP, who is controlled by Upbit. And more recently, Binance launched their own closed source protocol and solution, GTR. And what the industry has been struggling with is with interoperability between closed source protocols and open source solutions. And what this means is that if the industry wants to be able to reach these large players with travelable messages and therefore be able to compliantly transact with them, they are mostly forced to become members of these networks and closed source protocols. And in many cases, they are forced to, or they're put in a position where they need to handle multiple integrations of travelable. So they have their notes of any integration or their SumSub integration, and in parallel, they need to have also to work on an integration with Trust or GTR or Verify VASP. And this is not only an issue in terms of resources, technical and financial, but also on the effective implementation of the travelable. Because if you're implementing travelable across different networks, I think it's very unlikely that you're able to make use of the information that you're getting from all of these networks in a very effective way. Or if you're able to do it, it requires a lot of technical resource and a lot of patches and fixes to kind of be able to standardize the way you consume that information into your risk frameworks. So I think the bottom line here is that interoperability is ultimately severely hurting an effective implementation of the travelable. And until we solve it, travelable will not reach its full potential as a helpful tool to fight illicit activity, but also allow crypto rails to be used for real economy, because the travelable actually is a catalyst for us to build the pre-transaction authorization flows that are typical in traditional finance and that are super important to manage risk, as we just talked about. Travelable also gives us a context layer to the transaction that allows you to tie your transactions to specific counterparties, to specific contractual obligations, and all of that is very important for business operations. So what's at stake is, on one hand, the effective implementation of the travelable, which has knock-on effects on your risk frameworks and sanction compliance frameworks, but also on the industry's ability to integrate into real economy. And what's the solution for this? I know anyone that has had to deal with this issue is probably very tired of it, but how our stance on how we overcome this is by adopting open standards. So our stance is that the messaging layer for travelable information needs to be powered by open standards. We cannot, this is the only way that we're going to actually solve fragmentation. In the meantime, we do everything that we can to build bridges with other protocols. So for instance, we help our customers ingest information that comes through Trust Hub. Trust Hub is an initiative by Trust to allow their members to share information with non-Trust members via email channels. Obviously, email channels are not super scalable for compliance operations, so we help our customers ingesting that into the Nota Bene platform, for instance. But ultimately, we don't think that these bridges are the ultimate solution for solving the lack of interoperability. We actually need to endorse open standards as the path forward. And we actually yesterday published a kind of a call to action for the industry to really stand behind open standards and choose this as the path forward to ensure an effective implementation of Travelable in the future. So I'm going to drop the link to that call for action here in the chat for anyone that is interested in reading through it, and I'm more than available to have follow-up discussions on this topic. And I will shut up to also let you guys comment and share your perspectives on this issue and how you think we can overcome it.
Thank you, Katerina. From the exams hub perspective, we also try to partner with the other travel solution providers. Like we have a connection with GTR and Code, and we are negotiating with other travel solution providers. And I think that at the moment, this is the only one way to handle this interoperability issue. But in the future, as for the future, I'm not sure that the common standard or a common protocol would be possible, because even if we have a common open standards, we still will have private companies who have protocols, and they need to negotiate with each other, need to communicate with each other. Not sure about the future of this solution.
I sympathize with that. And I think that is obviously the reality that we're dealing with now. But as Travelable becomes kind of essential facilities to that power transactions in digital assets, I think having that essential facility being controlled by players with vested interests in other sides of the market is going to become unacceptable, hopefully, as we've seen in other or regulated at least, right? As we've seen in other industries. So, for instance, whoever controls the electricity grid has a lot of restrictions on what they can do on the production and distribution markets for energy, because obviously if you control the electricity grid, then there we have a natural monopoly. We cannot have one electricity grid for all the energy producers out there. And if you have control over it, you are restricted in what you can do in the production market, because you obviously are able to favor the energy you produce to go through the grid before you let others in. So the same type of thing, I think I draw a lot of analogies with that, also with the Google search engine. We're all familiar with the European Commission's fines on it. So Google cannot use the engine to promote their own products on other verticals, because the Google search engine is considered an essential facility, right? So I think I draw a lot of analogies from these examples, and I think we are still a very nascent industry. So this is how things have developed, and we just accepted it as the status quo. But hopefully that will evolve and change.
Yeah, I have to. I think I tend to agree with you, Katerina, in that when you look at obviously what both the EU under MiCA and the FCA under its proposals are doing in terms of, let's say, market abuse, they are looking for basically centralized organizations that are created by industry to pick up that baton and create platforms which, are funded by industry in order to provide oversight of, or reporting repositories in effect. So I think there's definitely a push towards regulators saying, you know what, this is the nascent industry, you folks understand it, figure out, go figure, go give us a solution. And I think that's probably the way it's going to be for a little bit, until obviously anything goes wrong, in which case the regulators will then tend to take it under their wing again, as they did after the financial crisis. But no, I thought that was really interesting to understand.
Yeah, another way to think of it is, for instance, think about Visa. Visa would never have taken off as a payment network if it had stayed with the Bank of America, who was the original kind of I don't know, developer of the program that gave rise to Visa. But if it was Bank of America being the orchestrator of that network, they would have misaligned incentives with all of the banks that are part of the Visa network, and that wouldn't have worked. So Visa emerged as a neutral entity that was able to pull off this network that has immense value added, or added value to all of our lives. So yeah, I think things will evolve in the right direction. We're just very in a very kind of nascent, immature phase of the development of this industry.
I'm just going to jump in there. I know we've covered a huge amount during that session today, and I personally could probably listen to you talk about this for another 2 or 3 hours. And I'm sure most of the other people on the call could, and I'm sure you could probably talk about this for another 2 or 3 hours as well. But I'm just very conscious of time. We've had nothing directly through from the panel, but I thought it might just be a good way to close the session, and maybe just to get some final thoughts from each of you on what are the key takeouts that you would want people to kind of walk away from here, and what are some of the primary actions and things they should be considering just based on all of the discussions that we've had. So hating to put you all on the spot, but maybe Bav, did you want to just maybe have a quick sum up first?
Yeah, I think it's key to understand. I think as a lawyer, I'm obviously going to say this. I think it's key to understand the rules. I think it's key to understand the guidance that's out there and what the industry bodies are doing as well, and what tools are out there. The FCA is looking at this more, more closely in terms of, when you are looking to get authorized or registered. Sorry. And I think, as we do start to go through to the FSMA regime, there are going to be more hooks for the FCA as well to ensure that travel rule compliance is, incumbent amongst firms. So, I guess the takeaway is understand what the obligations are and get advice where you need it.
Fantastic. Anastasia, did you maybe want to give your thoughts?
Sorry, but could you please repeat the question?
Some
technical issues.
No, that's okay. Just any final thoughts, anything that specifically you just want to kind of highlight to people that they should be aware of, or where you think priority should be, just based on the conversations we've had?
Oh, yeah. So I would say that the travel rule is the hot topic at the moment, and it will be the hot topic maybe for several years. And we just need to try to make it more smooth and more clear. It would be good to communicate with regulators and ask them to provide some kind of clarifications, because as we discussed, one of the main issues is the regulatory issue. And unfortunately, yeah, we can provide some kind of solution, but in the case of the lack of the regulator's approval or regulator's opinion, at least, it will be just interpretation, it will be just a solution, but we need to have some kind of clarity on the requirements.
Fantastic. Thanks, Anastasia. And Katerina, your final thoughts?
I would say don't underestimate the time it takes to implement the travel rule correctly, because you will run into a lot of rabbit holes into the implications that this has on your end user's journey, and a lot of issues that are not that you can't identify just from a first reading of the requirements. It's really when you get your I'm thinking about the Portuguese expression, but when you get to work on travel implementation, that you start discovering all of the things that you need to solve. So don't underestimate the time you need to prepare for it if you're just starting now.
Excellent. Well, look, it just remains for me, on behalf of CryptoUK and all of our members, to say a huge thank you to all three of you for obviously sharing all of your great expertise and knowledge. It's been a really, really useful session. As I say, anybody who has been attending or anybody who's watching this afterwards, if you have any questions, please do reach out. Obviously, we have some fantastic experts within our CryptoUK community. I'm sure they can support in terms of any guidance or advice that you might be looking for as well. But Katerina, Bav, Anastasia, thank you all so much for your time today, and thank you for a really interesting session.
Thank you so much.
Thank you. Take care. Bye-bye.
Bye.
Bye.